But let's welcome on board Jitendra Arora, the Senior EVP, as well as the Fund Manager at ICICI Prudential Life Insurance Company, joining us on the show. Jitendra, hi, good to have you. Let's begin by discussing the market setup, right? It looks like as we are getting into the Diwali week, the momentum is building up on the positive side, and probably we'll close towards the, the record highs that we had seen maybe by the end of the year. Would you concur with that view?
So for us, honestly, it's very difficult to say what's going to happen over such a short time horizon. Obviously, there'll be various factors which will be determining the course of the short term in the market. But yes, we saw a bout of weakness, which was primarily because of a lot of FII selling, which we saw in the month of October. And from then, we have seen that market is gradually inching back upwards towards and showing some strength now. Again, I believe on the back of the domestic inflows and some easing off within the FII outflows. And I think that's what is taking the market where we are right now. But if I think about market from a short-term perspective, I think it's likely to remain volatile given what's happening globally, as well as because of the certain domestic factors. Globally, we have seen that even though the Fed has changed their stance marginally, soothing markets' nerves, and we've seen reaction on US markets as well as US rates, which has also then rubbed on to various other global markets, and we've seen a rise in equity markets across the world. That's one factor which is playing out over short term. The geopolitical uncertainty still remains high, according to me, so that's likely to again impact the markets. On the domestic side, obviously the flows are what is impacting the market. In addition to that, we also see some kind of volatility may creep into the market because of the elections which are there around the corner.
Absolutely. I want to just talk about one specific sector, Jitendra. This is Vinny joining in the conversation as well. Is, the retail side, because what's piquing my interest is trend that has actually done quite well compared to other retailers. So, what is the sentiment that you're understanding from this sector as a whole? Other retailers have not done as well as Trent has done today. What is it that you're watching out for?
So honestly, I think in retail, it's more about the execution, how different companies are going about executing their strategy. And Trent there has done well. We've seen Titan also delivered a good result a couple of days back. So we've seen pockets of retail which have delivered well, but there are certain pockets which have been affected much more by the underlying slowdown on the retail side, and that's apparent perhaps in apparel or in QSR per se.
Do you think pharma has bottomed and there are opportunities which are emerging today? Of course, that sector is a top sectoral gainer. Alchem, Gland, these are some of the result reactions we are seeing. Even Oro Pharma has doubled this year. See opportunities within pharma?
We like pharmaceutical at this point in time as a sector because clearly what was happening in pharma after the sharp run up during the COVID, early part of the COVID was a slowdown in the earnings as COVID weaned off. But then we've started seeing that because of a lot of factory site closures, etc. We are seeing that in US market, the price erosion has come off, and we can see that finally there are certain pockets where firms are able to make a better price, and that's resulting in better volume sales as well as better profitability. This is what is helping a lot of Indian pharmaceutical companies which have a good exposure to US. And at the same time, we've seen that some of the key input materials where the prices had gone up over the last 4 to 6 quarters, there the prices have started coming off. And that will also flow into perhaps the margins for some of the companies which are India focused. So overall sector is well placed. I think we should see sector perform over next couple of quarters as well. And from there, it will obviously depend on how the US market is playing out in terms of the pricing.
Right. Jitendra, other than pharma, is there any sector that is piquing your interest as of now? Obviously, previously you were talking also about this is going to be that election year that everyone is watching out for. So anything specifically on that front that you would look at as a theme?
So for us, we do not focus so much on the election year themes. We try to be much more about what we like as secularly, irrespective of what's happening in the short term. So from that perspective, I believe large private sector banks is one theme which we like. Though I agree that we will see some kind of earnings slowdown because as the interest rate will flow into their cost of fund, we will see earnings slowdown happen. But given that these are the franchises which have stood the test of time and on valuation, clearly they are very attractive. So that's one space we like in general when it comes to the markets.
Space you do not like, Jitendra, which is the space you are underweight on a relative basis?
So, IT is one space where we continue to remain underweight on a relative basis, and that is again driven by the fact that we still believe that some more slowdown may be there in the US, and that's likely to flow into the earnings for some of these companies. So, we clearly think that the estimates for FY25 may be cut a little bit before we finally see the companies turn the corner on the earnings side. So that's one sector where we are underweight. But I must say that that call for us has largely played out over last few quarters, and I think in another quarter or two we should see that that space becoming attractive as well.
On that note, we let you go. Appreciate making time for ET Now.